Stock investing for beginners. Let's talk about how to start smart and get paid. So I want to walk you through a little bit of a method here and just a couple of very basic choices that you can make that really add up quite a bit when you stop and think about just how little amount of time it takes to implement these couple of choices here. But this video, hopefully you can tell from the title, is definitely geared towards those that are beginners. They're just getting started in the stock market. They're understanding the value of investing and now want to start to grow their money, build wealth over time. So if that is you, I can understand it's a bit of an intimidating process up front. And you can be, can I really do this? You can. I promise you can do it, especially in this day and age of technology. But I want to just walk you through one scenario first, and then I'll walk you through the scenario that I would propose you do. Because like I said, for just basically the one quick decision you need to make and to implement this decision, it's literally just a second. I think it's going to be well worth it. But the point here being is this will allow you to start to invest and start to build your wealth. And it does not take a whole lot at all. Now, to use this as kind of a reference point about the power of making this little decision and how you can get paid and how actually getting paid makes a big difference within the grand scheme of things, what I'm using here is investor.gov right up here. And they actually have a fantastic compound interest calculator. So maybe you already have heard of compounding interest. You know the power of it. If you don't, then you're going to see it here real quick. But the point here is not necessarily to talk about compounding interest, but just to show how if you make one little decision, it puts quite a bit more into your pocket later on down the road. So in order for this to all work, you are going to need at least $100. But first, let's just say that, you know what, I'm not going to do what you suggest. I'm not going to get paid. I'm just going to start with my $100. And you can do that if you want. But like I said, for whatever reason, you don't want to take the advice that I give here and you just want to start with $100. So, and let's just say that you contribute $100 every month. The length of time you're going to be doing this is 40 years. Remember, this is investing. So this is not going to happen overnight, not going to happen next week, not going to happen next year. This is long-term investing. You are looking to build wealth over the long haul, get that compounding interest working for you. And as far as the estimated interest rate, let's just say 8%. I could see some people saying that should be 10, but let's try to be, somewhat conservative. Let's just go with 8. And then we're going to come down here and hit calculate. And you can see that doing what I just mapped out, 40 years, starting with just $100, and then every month just adding $100 more, that's going to end up and put $313,000 into your pocket. And you can see right there, it starts off, got to have some patience, but then once that compounding interest basically right there takes into play, it really takes off quite a bit. However, doing this and making maybe not the choice that I'm going to talk about is going to hold you back a little bit. How so? Well, there might be some instances where you would like to buy a stock, invest into an ETF or some sort of asset, but at the beginning, at least, you just don't have enough money. You're saying, I would love to buy fill in the blank stock, but based on the price of that stock, I only have $100. I can't get started. So that's where the first decision comes into play here by using what I'm going to walk you through, because it will actually allow you to buy a stock that you think is overpriced, that you think you can't afford, but you can. So how is this possible? So what you want is what is known as, in the world of trading, right here, fractional shares. Fractional shares is very straightforward. Just to keep the math simple, let's say you only have $100, which is the premise, but you go and you're looking at a stock and the price of that stock is $1,000. So yes, you would be absolutely correct. And with many brokers, you would not be able to buy that stock. Again, if the stock is priced at 1,000 and you only have 100, sorry, there's nothing you can do. But with fractional shares, you could go and buy a tenth of a share. And the math there is easy. You would just take the $100, you would put that over there. And like I said, just basic math here. 100 divided by 1,000 would come out to, let's change up the color there, would come out to 0.10. So you could buy a tenth of a share. Now you may look and say, a tenth of a share? What's that going to do? But just think about it. At least you were able to get involved with that stock or ETF or whatever. For whatever reason, you found value in it. You thought that it would be a good deal. It would be a good decision to buy. So who really cares how many shares? If you can put that $100 to work, that's the name of the game. And you already saw the power of putting $100 to work. $100 and then $100 every month, that's going to add up quick. But what needs to be able to happen though is you need to actually be able to put that into the market. And without fractional shares, it's going to be hard to put that into the market for, because it's going to isolate you into certain areas and certain stocks because you quote unquote can't afford. But if you do have fractional shares, then you can afford whatever you want. So that's going to be the first decision, is make sure you use a broker that has fractional shares. So that's decision one that you need to make. The second decision that you need to make is you're going to want a tax-friendly account. You're going to want an account that at the end of the day helps to shield you in one form or another from taxes. And in, at least this is more so for American members and American subscribers of the channel, that's where you would want an IRA. So you're going to want to make sure that not only does your online broker have the ability to give you fractional shares, but you want to be doing all of this in a tax-friendly account. And again, in America, known as an IRA, which stands for an individual retirement account. So that's going to be the second thing you need to do. How to start smart. Make sure you can do fractional shares. Make sure that you can do a tax-friendly account. And then let's talk about getting paid. Now, before I start with this next one, just full transparency, full disclosure, the way that this occurs is you need to click on a special link. That link is an affiliate link, so if you do click on it and if you do deposit the $100, which is where that $100 mark is coming from, then I will also get something. So just to keep that, like I said, fully transparent, but it is an affiliate link. But think about how pretty cool this is. And I made a comment earlier about how making the decision and then implementing the decision takes just a couple of seconds. So how do you get paid? Well, the way this works, and the broker that I would recommend that you at least look into, consider, is going to be Webull. You probably already noticed it on the previous screens, but Webull. And when you click on the link down below, so if you're watching this on YouTube, down in the description box, clicking on the link there that I'll point to, or if you're watching at my site, claytrader.com, we'll put the video or link right down below the video. When you click on that, it's going to take you to some promotion. Now, Webull is always changing the promotion, but the point here being is there's some sort of promotion that is going to pay you, that is going to give you something for signing up with that link. So by simply clicking on a link, taking 2 seconds to click on the link, you're going to actually get paid. You're going to make more money, which allows you, or you're going to get more money, which allows you to start with more than $100. And you can see at the time of this recording, again, this is always subject to change, but right now you get 2 free stocks, which is pretty cool. You don't know what stocks you're going to get, but 2 free stocks, which you could then get and then sell, and you're going to have more money on top of the $100. Now, this does require for you to deposit the $100, which is why I started out with that number anyways. So assuming you have $100, like I said, you can start and just do the $100 all on your own if you want. And you'll see that turned out to be very nice still. Or you can just start off with a little bit more by getting paid by just, like I said, making the decision to click on that link. So like I said, you can click on that link, you can use Webull, get signed up, and now you're going to have more than $100. Now I'm going to find, try to find a common ground because, to be fair, the range there could be more than the amount I use. It could be less. Like I said, I'm going to try to play it conservative, and I'm not going to assume like best case scenario. But let's say that you decide to go with Webull because of the fractional shares, because of the IRA accounts, and because you're like, you know what? If I can start with even more than $100, why not? So let's see what sort of difference that would make. So for argument's sake, let's just say that the stocks that you get or whatever promotion they're running comes out to be $50. Again, it could be more than that, might be a little bit less, but let's just say $50 to keep it easy. But the point here being is it's going to be more than $100. So this is very powerful because when you talk about compounding interest, we're going to go over here and we're going to change this now to 50, right? Because you're not going to start with 100 anymore. You're going to start with 150. Now, everything else will leave the same. We'll leave it at, you're still going to do $100. It'll still be over 40 years, and it'll still be 8%. But let's see what that actually comes out to. And let's do this here. So let's bring the calculator here and bring that over. Because right now, choice number one is, like I said, just $100. You do nothing more. So that's 313,040.27. So we'll keep that number in mind because we're going to now see what starting and what clicking on that link would actually do. And now you're at 314,126. So let's do the quick math here. So minus 314,126.50. So look at that. $1,086 more, which is kind of crazy when you really just stop and think about it. Literally by clicking on the link and using the link just takes 2 seconds, maybe even a second. Maybe you're really fast with your thumbs. It takes a half second. But just doing that could put over $1,000 more into your pocket. Isn't that kind of crazy when you stop and think about it? I mean, you're getting paid and then you're getting essentially $1,000 more. It could be, let's just do this. I'm just curious now. Let's say that, well, no, I don't want to do it. I was going to say, well, let's say you get more than $50, but like I said, I'm just trying to keep things conservative. But with that, you're getting $1,086 more by just deciding, you know what? Not only am I going to do fractional shares so I can get involved, whatever, and I want this all to happen in a tax-friendly way, but by just clicking on that link and getting some free stock, getting some sort of promotion so I can start with even just $50 more, $50 more equates to over $1,000 more in your pocket. That's a pretty good return on your investment. So that is what I would recommend at least considering. Again, I'm not a financial advisor. I'm not saying that there's anything guaranteed to happen because, the stock market does not offer guarantees. But historically speaking, markets have gone up. That's always subject to change, of course. But at the end of the day, I'm just throwing this out there as something for you to consider and to show that little small decisions like, you know what, why don't I click on that link? Because even if you like Webull anyways, you know what, if you can just start off with $50 more even, crazy to think that just starting out with $50 more ultimately puts over $1,000 more into your pocket. So like I said, click that link down below if you want to, implement everything here that I'm talking about. If you don't, that's totally cool too. I'm just glad that you're excited, you're interested, you're seeking out more information on how to get started investing, because investing, building wealth, that is the name of the game. That's putting everything into your own hands. And that's what I'm a big fan of is if you're going to build freedom, if you're going to build wealth for yourself, then it's best not to be dependent on other people. It's best to just depend on yourself. So like I said, whether or not you want to use the link, that is totally up to you. I'm still more than willing to help. We're still friends if you're watching this. But if you do, then hey, you just saw the math and saw how it all worked out. But Webull, great broker, offering everything, especially those fractional shares to make sure that you can get involved in whatever you want. And it's got the, the IRA accounts. And by using the affiliate link, like I said, you can potentially start with, more money, and then it'll grow just that much faster. So hopefully this helps you out. Hopefully this can at least point you in the right direction of the things that you should be considering and factoring in. And even if you don't use Webull, I would still highly recommend that you find something out there that's going to offer the IRA accounts and the fractional share purchases. Those two things are very, very important. But if you do want to follow this exactly, well, then I've mapped it out, and hopefully you decide to make that decision. But like I said, at the end of the day, I'm just excited you're interested in getting started investing, because that's the name of the game. That's how wealth is truly built and freedom is established. First off, thanks so much for watching the entire video. Real quick, before you go, I want to invite you to a live webinar, web class, training, workshop, online event, whatever you want to call it, but it will be me live revealing to you what I've discovered that has allowed me to transform myself from being an employee to being my own boss, including how I had only one losing day out of 73 days in total. I'm going to cover 3 keys that have helped me unlock profitable consistency within the markets. The first key is super weird, but in a productive type of way. The second key is super awesome because it quite literally is wired into our DNA as humans, making it very easy to use. But in a cruel way, this becomes a pitfall for many traders. I'll explain it all though, including how to avoid the pitfall that it creates for some. And yeah, the third key, when you hear it, sounds way too good to be true, but it's not, and I'll show you how it all works. Then at the end, I open it up for a question and answer session that is, again, totally live. Even if you can't make the live session, please still sign up as it will be recorded, and you can go back and watch the replay that I will send you. Click the image on the screen or click the link down in the description box so you can get the date and time and claim your spot, which I should note is limited due to the fact that this truly is a live event. If you have any questions, let me know. If not, I'll be seeing you soon.